morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, July 10th. Well, we had an exciting couple days. We definitely had a little bit of a reversal yesterday, actually. We were at one point up in the Dow about 160 plus points and ended up really take about half of that off by the end of the close of business. So not so great, but nonetheless, we are up again. The ES is up about 26 handles in the pre-market. Again, strong close in China. Talks about Greece, so that's a good thing, and everybody seems to be liking that as far as the market participants. So what do we go from here? And, well, we're looking for a little bit of a rally. I mentioned a couple of days that we're looking for some sort of a pop-up and then some sort of failure yet again. We're coming into that 2 to 3 week window of seasonal strength I've been mentioning for the last couple of weeks. That goes into right around July 17th. That'll put us into the end of next week. So maybe we're up and down a little bit, but still gradually moving higher. And then we get a little bit of weakness. And then I would suspect just a typical summer grind all of August. And then September, October, I do think it looks like it's going to be a different story. I'm hoping to see some sort of a correction. And again, because it's healthy for the markets to correct, and then we can get a really big Santa Claus rally going into the end of 2015. Again, longer term projection. So I'm still paying attention a lot what's going on with Greece, and obviously what's going on with China, which is really that the canary in a coal mine. And I've been saying that for the last year and a half. But you know, obviously, when China is a big manipulator of their economic data, obviously, it doesn't matter what we think, what's happening. It's what the numbers are and really what price action tells us. So right in front of you, we have an ETF of the FXI, which is a China ETF. And you could see it really had gotten decimated on a big fall. Yesterday, we popped up about a couple of dollars, and we're up again about $42.78, which this is today. This was yesterday's, and this is today right now. So another big move up. I would suspect we tag somewhere around that 200-day moving average, anywhere in that area. And as you can see here, the volume zones, you can see supply and demand here heavy. And then once we get back above that, then I think you'll see a big shot up. And I would put some numbers, some Fibonacci retracements number there to give you an idea where that potential stop in that area would be as far as this retracement rally. But again, not good. I mean, just definitely not a good sign here. Yes, things don't just go straight down or straight up. Would I tell you to be short down in the area? No. I mentioned a few times that the ES, the E-minis, were holding 2040, 2050 area pretty good, while like Greece has been really getting hit hard and China falling apart. And you would have thought that you would see the ES down to about 2000, 1980-ish. And that would be my secondary target, but held very well because of what's going on. You know, buyers of dips are happening. Central bank and you have the Fed here just doing what it can do to hold the markets up, which I think is a wrong thing to do. But nonetheless, that's what you could see it happening during the course of the trading day. You know, bids come in from a real technical level. All of a sudden, they just come out of nowhere. But anyway, that's China. So we still need to keep an eye on what China's doing, guys. Very important. What I like to see here is some sort of a bounce like we're getting, and then let's see if they fade the bounce again. You can see clearly here, bear flag in the spiders. And again, we actually faded that move, pretty much most of the move. We were up about 20 handles in the ES and ended up being up only about 2.5 points. Not good. I mean, really not a good sign. That we had sold off. I was suspecting that we're going to see some pre-market weakness, but nonetheless, again, China really rallied hard, and that really put a bid into of the markets here. Just kind of saying that, you know what, we're stabilizing the market, it's not a problem. So, but I would still be suspect of this rally here. That's for sure. IWM again. It popped up and failed back down again, but it is above the 200-day moving average. That is a good sign. But you can see the lower lows and lower highs here. We still have this bearish symmetry. Not a good sign. What I would like to see is that little retracement rally up, maybe some couple small down days next week, a few big up days, and then we get into that weakness again. And once we get into that weakness, whether it be Greece or China or any other type of catalyst, then I would suspect once that area, once we get down to a certain point of support again, I think the markets just kind of drift through August. Now remember, news does trump the chart, so you just got to be really careful here. Transports, I mean, there's nothing good about the transports. You can see this clearly. You know, we have some key numbers this morning that are coming out, and that's going to really affect the transportation sector, so keep an eye on that. But again, my target's going to be right here, guys. I've been saying this right about this area here. Once we broke, I said this is going to be eventually the target. And without saying it's going to be a magnet, it will get there. It will get there. And this is not a pretty sign. China breaking down the transports, the Russell 2000, 2 leaders here out of the 5 that we follow. Just not a good sign here, okay? Diamonds, you can see the diamonds. They're just stuck here in this area as well, but under the 200-day moving average. So the Russell is the only one that's still hanging in above the 200-day moving average. And then lastly is the Qs, which I think the Qs actually in technology here in the U.S. held up relatively well despite of China's sell-off. I mean, I would have suspected that China really took it on the chin here, but nonetheless, it's holding in and doing quite well, and it is also above the 200-day moving average. But again, you see these flags. We have flag patterns all over the place, and eventually, as they break down, they're going to follow through. So use caution here, okay? I'm a big believer on reducing risk when you have volatility. Good volatility is we love the volatility as traders, but when you're holding things overnight, could be a little bit could be a little bit nerve-wracking, if you will. There's a few things, though, if you are going to hold a few positions, which I like to do when ready, and really wouldn't kind of relate to what the markets are doing. Try to pick your stock or your index or ETF or whatever you're going to do, and just wait for that perfect entry, because then you will be rewarded. I do like bonds short. I mentioned that several weeks ago. I do think bonds have topped. I had a few emails yesterday asking me about bonds. Really funny, because I was thinking about it as well. And I like the bonds short. And a good way to do that is play the TBT ETF. That's an inverse, so you'd buy it to get short. And you can see here how it tagged the 38% retracement right to the penny from the top to the bottom here. So that 38% retracement here, that's another, you can see higher highs and higher lows. Now this is the inverse. Remember, again, you buy the TBT to be short bonds. That's something that I really like to see. You could actually play the ZB short on any type of rally. And again, we rallied, which was really funny, because we did rally in the bonds because we had flight to safety. And that was really a cue to get short, to really get short bonds. It had gone to be about 153-ish, and then now it's at 150. We've got a 150 handle. Really interesting. I would like to, again, and continue to short bonds on any extreme rallies or any big rallies. So just keep that in mind for a trade. Not ready now, because we've already sold off pretty substantially the last couple of days because of this market rally the last 2 days. Because again, nobody needs bonds. Why they need bonds? They sell them and they go into stocks again. So that's really what's happening. But just keep an eye on it. It could be a good trade going into the next few weeks. Have a great weekend, all, and I will speak to you on Monday. Take care.